Hey, before I hop off the stage, if I don't get a chance to talk to you, all of you, or shake your hands, I know a lot of you might be leaving tonight. Thank you for coming. I know a lot of you might be jumping out of here fast. Do me a favor, stop and say thank you to anybody in an orange shirt or at registration or any of the speakers, because they all gave their time in order to make this thing happen. So thank you again. Thank you for coming, and I'm going to hand it off. Take care.
Great. I don't need it yet. I got this one. All right, guys, we got this last final big panel up. Thank you, everybody, for being so patient with us today. It's been a great inaugural event, though. We've had so much fun, and I can't wait to have this last panel with these incredible thinkers, innovators, job creators in the space. I'm going to go ahead and bring them up and let them introduce themselves because I will not be able to do them justice. But let's go ahead and bring Mike Alfred up from Iris Energy. What's up, Eddie? Yeah. Next up, we got Nathan Nichols, CEO of Rhodium. Let's go. And last but not least, we have Chris Manzano, operations team at Bitmain. All right. What's going on, guys?
How you doing?
Been having fun? You been having a good event?
You've been crushing it.
Oh, thank you. I've been working really hard. It's been a fun time. What about you, Mike?
Loving it. First year. I think we'll be back next year to sponsor the main stage again, I'm pretty sure.
Yeah. Main stage sponsor. Yeah, Iris Energy. We really appreciate you guys a lot. We thank you very much for that. What about you, Chris? Been having a good event?
Good so far. Yeah.
I'm looking forward to finishing this conference off with a great panel about miner procurement, capital markets, and renewable energy. 3 really hot topics for those that are interested in getting in the space or advancing themselves in the space. Let's just go ahead and get right into it real quick. Miner procurement is one of the most difficult tasks. Oftentimes you see people building out these large stations and aren't able to fill them with miners themselves. What would you say are some of the biggest hurdles in sourcing hardware? And we'll start with you, Mike.
First off, thanks for having me. I'm actually an independent board member at Iris Energy, so don't actually work at the company, but we are an Australian domiciled company. But all of our operations to date are in British Columbia. So we actually have a 30 megawatt farm in Canal Flats. We have 2 other farms being developed right now in Prince George and Mackenzie. We also recently started developing some sites here in Texas that we're really excited about. And so it's a very interesting story, right? Because the 2 brothers who founded the company are Australian, and they have an energy infrastructure background like Macquarie and firms like that. They founded the firm with a vision to build out an industrial scale miner powered entirely by renewable energy, but not just powered by renewable energy, but only in areas where that renewable energy is in excess, right? So we don't want to take power away from moms and pops, right? We don't want to drive up the cost of energy. So places like British Columbia, even though it's a regulated market, there's a tremendous amount of excess power because the paper and pulp industry is sort of pulled out of that area over the last couple of decades. And so you see similar dynamics in other regions. So we just recently went public on the NASDAQ in November. We were one of the last companies to get out before the window sort of shut down. Like the week before Thanksgiving, I was sitting at home watching CNBC, waiting for the trading to start. It was a dicey situation, but we got out. We thought being public was the right decision for the company at this point to give us access to more capital. But the reality is, Nathan and I were just discussing earlier, is that private miners have plenty of access to capital right now and actually are more highly valued than public miners in a lot of cases. Our first earnings report as a public company will be tomorrow after the market close. So you might want to listen to that because Daniel, our CEO, will be giving a full update on the business and everything that we're doing. As it relates to miner procurement, if you don't mind me just answering that question real quick.
Yeah, we can do that, or we can.
Maybe let's do intros.
I jumped up past the intros real quick. Let's go ahead and go on to Nathan and let him give an opportunity to tell him what he's doing over at Rhodium.
Yeah, thank you. Probably not going to be as eloquent as you, Mike, but we're probably known as the liquid cooling guys. We're the largest operational liquid cooling mine that's out there. Great team of family, kind of born and bred Texans, and just proud of what we're doing. Keep our heads down, stay quiet, make a lot of profit.
Chris.
Okay, and I'm with Bitmain. We're a major manufacturer for miners, and I sort of just started exploring mining farms and found myself in this position. So I feel I'm blessed.
Awesome. Let's go back to the question, miner procurement. What are some of the biggest hurdles in sourcing hardware, Mike?
Well, I mean, obviously, it's really scary when you send $100 million to China and you don't really know if you're going to get anything back, right? So, like the first time you do that, it's a little nerve-wracking. But the reality is, over time, firms like Iris we built up a great relationship with Bitmain. We actually signed a $530 million contract in July of last year at about half of the current price. So we timed that really well. I don't believe timing is a key consideration long-term necessarily, but in reality, like I'd rather pay half price for miners versus paying the full price today. And so because of our close relationship with Bitmain, we're in constant contact. We talk to Bitmain as a firm pretty much every single day. And so we have a form contract now. When we do want to pull the trigger on machines, it's relatively easy. We can execute really quickly, and we're less afraid of sending that $100 million across the ocean because we have a long track record of being able to successfully receive those machines. There's obviously a lot of delays, though. There's supply chain issues. Some of the biggest manufacturers have had to move out of China and manufacture in Malaysia and Indonesia and other places. All of those things create additional risks at being able to deliver on our timelines because we would like Prince George and McKinsey to go live before the end of the year. That's an extra 4 exahash for us. Our current, Canal Flats location has about 0.8 exahash and 30 megawatts. We'd like to get up to closer to 5 exahash, obviously, as soon as possible, and then add another 10 here in Texas over the next 24 to 36 months. We don't make specific forecast timing, but obviously we're targeting to do that as soon as possible. And one of the biggest risks is whether or not we get those miners on time.
Real quick before we go to Nathan, you said something there that was interesting about supply chain issues. Has that been a major factor since the pandemic?
Absolutely.
What sort of impacts have you noticed from that?
Well,
and do you think it will improve as time goes on?
I mean, it starts with the chips and the wafers, right, coming out of TSMC and other folks that are the foundries that are actually making those chips that go into the mining rigs, right? And so those companies want to give their production to firms that have done a lot of business with them recently where they have confidence, right? So they're much more likely to give those chips to a large firm like Apple or NVIDIA or whatever than they are to a Bitcoin miner. And so that's where it starts. And then, the actual manufacturers, again, many of whom are in China, they've had to move some of their production to other places, and that slows everything down.
Nathan, what are some of the biggest issues that you've seen when it comes to procuring hardware?
So, first off, as far as like procurement is concerned, it's really, I think a lot of it is tenure in the industry for us, and we're probably the black sheep, but MicroBT is who we source all of our equipment through. It was not a great picture in April, May of 2020, but I think, there was a lot of pain that was felt in the Bitcoin mining industry on the manufacturers and the miners alike. And so for us on the procurement side, we've developed an incredible relationship with MicroBT. Their leadership team really cares about the clients and has a really westernized approach in how they're doing business. And so for us, we haven't had any supply chain issues. I sound like a MicroBT fanboy, but it's probably because I am. But we haven't had any supply chain issues. They've never been late. They've honored every single word in their contract. We're very thankful to do business with them. So for us, we haven't had any issues.
It's great to see other organizations, other hardware providers that are making a good name for themselves in the space.
Yeah, I think, having more competition is a good thing. It's better for the industry. It's better for global hash rate production. A lot of the people that own Bitcoin, you hold it, but as miners ourselves, our job is to secure the network. And so being able to create more exahash all around the world and having more manufacturers and more capabilities, long-term hash rate growth means that the value of the network is increasing, which inevitably leads to more scarcity because of difficulty, which then drives price up. And so in the short term, miners feel pain, right, when difficulty skyrockets or things like that. And I'm sure everybody's seen all the press releases of 2022 and 2023 growth. And I'm sure that's going to be painful for a lot of miners. But long term, it means that the reward that you're getting from the network, the incentive is getting smaller and smaller on a per fractional share. And so what that means is you're basically increasing the intrinsic value of Bitcoin. And so Bitcoin mining is a very cyclical business, but long term, price follows hash rate.
Real quick before we go to Chris, what are some of the things that you could give advice to maybe the small, medium, or just someone that's new to the space on how to prepare for those difficulty adjustments, or how to prepare for the massive hash rate increases we're going to see going forward?
Raise a lot more capital.
I'd say be thoughtful in your approach. For Rhodium, we're meticulous with our cost engineering, design, and process. The success of a mining operation largely is predetermined as soon as you purchase all of your infrastructure and what your power contract or PPA is and what you have as far as your machine cost, because we look at the machines like they're liabilities until you ROI through them. And so you just, got to be confident in your assertions, and mining, being the lowest cost producer wins for the people that are, producing at a very low cost. If price goes down, it's actually a J curve if you think about it. So if, let's say, Bitcoin went to $10,000, a lot of the hash rate would have to fall off because it wouldn't be profitable anymore. But the people that are the lowest cost producers actually then make more Bitcoin. And so everybody knows about kind of China going offline and the big boom that it was for North American mining. All the miners that stayed online were making the same money, even though Bitcoin was $30,000 as they were when it was $64,000, because you had half the difficulty there. So, but to answer your question directly, I really, one of my friends is Whit Gibbs. I'm on the advisory board of Compass, and I really like that they kind of filled that chasm as far as people couldn't participate, right? And if we truly want to decentralize the industry as a whole, then I was thankful and happy to see like people can get excited again, and you can work together in this cohesive relationship with other small miners and actually have a shot. Versus, I would say, mining solo is kind of risky now because there's just a lot of barriers to entry. There's a lot of moats.
The market has been maturing. The industry has been maturing pretty dramatically over the last several years. Chris, going to you, it'll probably be a little bit of a different angle for the question, but have you had problems delivering hardware? Have you had problems sourcing the materials for the hardware?
So what I'm gonna steer this a little differently. The original question was how, basically, what are some of the things that can help you get access to miners? I think one of the big points that we touched on is that having a relationship with the manufacturer is important. You need to build trust. You need to have trust there to be able to trust somebody with sending over $100 million. So going to these conferences and meeting people that are in the manufacturers, people that are in the part of the companies, I think it goes a long way. So if you're looking to kind of solve that supply question, building a relationship with the manufacturers is one of the best ways you can do it.
What are some of the steps someone can take to build that relationship? Because, is it like just to start with a smaller purchase? How do you get to the point where you feel like you can trust to send over that large sum of money?
I think that a lot of that is on the manufacturer themselves. Have they built up a trustworthy persona? Do they have customers that they've already made sales? I think it's the same with any new business. When you're just getting started, it's really hard, but when you've established yourself, it's a little bit easier to have somebody kind of give you that blind faith or to take that first step.
Absolutely. It's interesting that a couple times we've already had them say $100 million order, $100 million order. Happens so be the next question is to explain the process for what it takes to place a $100 million order of S19s or micro BTs. Let's go back to Mike with this.
Can we go to the next question?
Next question?
Yeah. It's just it's not as interesting because we've been talking about it for a while and we don't have that much time. So
you have plenty of time. The timer is irrelevant.
Can we talk about capital markets or?
Yeah, you can talk about capital markets. You want to move on?
Yeah, because I think it's just a really interesting time right now because I saw, Genesis Digital Assets, which is one of these big miners that has exposure to Kazakhstan, right? They own like coal factories and stuff. Kazakhstan, that was a deal that I saw last spring, right? And it was done like in a sub-billion-dollar valuation. And recently they were raising money privately closer to $10 billion with like, rumored like SBF and multiple billionaires, right? The founder of FTX were in that deal, right? And then you look at a publicly traded miner like Core Scientific, which is in my view, one of the best operators in the space, and they're trading at like a $3 billion valuation, right? And Iris today was at like closed at like a $780 million valuation. And so there's this huge gap between public and private miners, and the whole rationale for going public at one point was, hey, now you get more access to capital. And it is true. Like, did everybody see that marathon convertible that they just did back in October, right? They did like, supposed to be 650 million. They upsized it twice. I think it ended up closing with the green shoe at like 850 million. That is a massive convertible note, right? It was done at a 1% coupon and like a 37.5% conversion premium. I mean, this is fantastic. I mean, there are very few companies in the world that can get better, cheaper financing than that. And I actually think, some of these early stage Bitcoin miners are really not that de-risked yet. So it's amazing that the capital markets are willing to provide that. Now, a private miner is not going to get that size, right, in a convertible note. Marathon was able to get it done even as they had an SEC investigation that they're about to announce, which is even more insane when you really think about it. So anyway, it's an incredible time to be raising capital. And my advice, like I talked to a team, a publicly traded miner at a much smaller miner a couple months ago, and they said, Mike, we just raised $20 or $30 million. And I said, that's not enough, right? You need to be thinking about how you can raise $1 billion. You need to think about how you can raise $3 or $5 billion over the next 5 years, because the market's just going to get more and more competitive as you have more industrial scale miners buying 500 million and $1 billion orders from the Bitmains of the world and plugging them in all of these farms that are being built right now. And we just saw Riot, right? We just saw Riot a couple days ago. That's like a 700 or 800 megawatt farm. It's absolutely massive. Like, how do you think you're going to compete with just a laptop, right?
Well, even Chad, when we were there, that was his whole point. When you asked him, why did you sell? And it was purely just financing, the amount of money he could get.
He said you literally couldn't continue as Windstone without pairing up with Riot. That should tell you how competitive and how hard it's going to be. And that's why I'm betting on guys like Nathan and Rhodium, just because I've seen them operate over the last year or so, and they're one of the best operators in the space as well. And the firms that can find a way to stay ultra low cost, get access to the machines, and then raise more and more capital, they'll do really well. But there are a lot of folks out there that are not as economic as they look, and you'll find that out as we get to the next halving, which is coming up in 2 years.
Nathan, I saw you wanted to jump in on that, the conversation around capital markets.
Number one, I appreciate the compliment. Thank you. So I think, everything is, for us and how we look at it at Rhodium, is everything is inputs and then what is output yield. And so I absolutely agree that like raising the most capital allows you to have the most capability and defensive, shoring up cash on your balance sheet and all those things. But I think it's what you do with the cash and how you're spending it, and if it's responsible spending that is really going to set up your company for success. And so, large publicly traded miners or private miners, everybody raised a ton of money in the space, and that's good for the industry. But raising more money means more infrastructure, means better network security, all those things. But also, when you look at the opposite side, and you talked about the halvening, right, that's going to happen in 2 years, people are looking at 2023 and building out there, and for everybody that's not, I think we're all miners, but for people that aren't, if you're thinking about what is the revenue that we're creating today when Bitcoin is 44,000 basic, and then you compare it to November of 2020 when Bitcoin was $15,000, you are making the same amount of revenue per petahash. At that time, the miners were $25, $30 a terahash. If you had a huge deal, you could get it for 20. They're $83 a terahash right now, but you're getting a quarter of the yield. And so when you're looking at the capital that you're raising, you need to say, am I going to take this capital, the sources and uses of it? Does it make sense for me to grow into 2023, into 2024? Because I know we're all Bitcoin bulls and everybody believes that long-term the price is going to go up, but we've also felt a lot of crypto winters. And so if Bitcoin stays flat, let's say it stays flat at 45K, and let's say you combine everybody's difficulty or exahash that they're putting on, and you have the exahash go up to 300 or 350.
Which is almost a guarantee by the
right.
end of the year.
And so it's like, all right, your revenue is going to get cut in half because of the halvening, and I know that eventually leads to another super cycle and all of those things, but I think that right now, as far as if you're looking at 2023 growth, the economics, they need to make sense again. And so shoring up capital in capital markets, absolutely the most important thing to do. This is a capital intensive business, but also make sure that the capital that you're taking is not creating a liability for where you're putting those sources and uses into your growth.
For the two of you, do you think it's even possible to truly compete unless you go public? Is that a necessary requirement at this point?
Clearly, it's not, right? Based on what I said before. I mean, there's a bunch of private miners like Rhodium and like Genesis Digital Assets and others that are actually doing really well without being public. I just think in the long run, like over the course of a decade, it may be hard to stay in business unless you have access to every low-cost source of capital that's available.
Nathan?
Yeah, I think it's another tool in the toolkit, right? For having access to that capital, but also with building out, those facilities. If you, again, going back to cost engineering, if you did it correctly and had the right inputs, remember that if you're liquidating the Bitcoin, you're a cash machine. Like the huge cash flows, free cash flow comes off of Bitcoin mining, and so. Like what we're seeing in the private space right now is that you actually have cheaper sources of private debt than you could get today. Now that the Russell 2000 is off 30-40%, you have the Nasdaq down 15% from highs, and that's going to change and it's going to go back, right? But capital markets can be incredibly efficient. They can also be incredibly fickle. And
that flipped in mid-November, because prior to mid-November, you'd want to be public. Now you want to be private. Can I just make one more comment on this? And
of course.
That is that I don't think the market is differentiating between the different operating models in mining, right? So there's all these publicly traded companies now. There's Stronghold, right? There's Marathon, there's Hut, there's Bitfarms, there's Hive, there's us, right? And they're all very different, right? Core Scientific has this like blended hosting and self-mining model, right? Because they acquired BlockCap and they acquired Radar and they rolled them all up together and took it public via SPAC. We do all of our own infrastructure development, right? So all custom data center design. We always own the land, which is different, right? Like whereas Marathon's an asset light model where they're just basically a hedge fund, right, with a bunch of capital, and they deploy it into machines and they plug it into somebody else's data center, right? So those are very different models, right? Stronghold controls their entire energy stack vertically integrated. We don't even do that. Right, so everybody's different, but the market is treating them like they're all essentially identical, and I think that is going to play out in interesting ways over the next few years. And so, being a stock picker, right, and actually understanding the underlying business models is actually could add alpha in this space, because the public markets, there's very few people, right, on the buy side or the sell side that really understand these companies yet.
So what you're implying is that the market hasn't figured out the value of these different structures, and when they do, you're going to see significant changes. But those who can figure out that information sooner...
Significant variations in valuations and differentiation between the different business models, that's not happened yet.
Real quick, Nathan, you said there are other tools out there for how you can raise capital. For some of the new people in the space, they're going to be wondering, what does that mean? What are some other tools that you can use to raise capital outside of going public?
So I think that if you have a good track record, we originally owned a liquid cooling infrastructure business and had a bunch of customers, and then realized that it was working really well and they were making 5 times more money than us. But if you have the respect and it goes back to the tenure in the industry, if you have a name that's behind you, and I got very fortunate to partner with Cameron and Chase Blackman, who had a big legacy, successful business. But if you have kind of that record behind you, it's going to allow you for people to trust the name, right? You see Mike Levitt on Core Scientific, for example. Like a lot of people just trust him because you look at his track record, and he's done an incredible job in his life. And so I think that right now, just to be honest with everybody, if you're getting into mining today, it's going to be tough. I think there's going to be another cycle. Difficulty is going to ramp. The people that are the lowest cost producers are going to do better. There's going to be massive consolidation that's happening in this industry. And going back to your point, is they're not being valued correctly. I think that there are best-in-class operators that are in the public and private realm that because we're close to the industry, we know who's going to execute flawlessly, and we know people that are, biting off a lot. And so capital markets are learning extremely, extremely quickly. If you think about last year, 2 years ago, capital markets were talking in megawatts, which is not a unit of revenue. And then people were talking in power cost. And power cost is important, but it's not the most important thing. The most important thing is to make sure that everything is online, running, optimized, all of that stuff. And so capital markets are learning. Look, we had, I don't know, a dozen Bitcoin miners that went public or something like that. And 2022 is the year of execution. Everybody said a lot of really tall orders, a lot of machines were ordered, and we're going to see what happens as far as construction and getting everything online. And that's where that value shift is going to change. But to answer your question directly right now, I think in the private arena, it's tough, or if you're getting started right now, it's tough.
I want to jump into the discussion around the Sailor strategy here in a moment. And then after we do that, I'd like to give Chris, you the opportunity to kind of explain what's going on with Bitmain, because I know that they're planning to bring 1,000 megawatts online in North America. But before we go there, let's talk a little bit about the Sailor strategy. We heard him get up today at this conference and say, if you're not keeping Bitcoin on the balance sheet, like, you're making a critical error. But there are different approaches. Between Rhodium and Iris, what is the approach for your company, and why have you chosen that path?
It's a tricky issue, right? And I've been on the record over the last year saying that I think these large-scale miners should hodl Bitcoin, right? And on podcasts like with Preston Pish, et cetera. And then I joined the board of Iris, and our strategy at Iris is to liquidate the Bitcoin daily, because we feel that we can get a better long-term Bitcoin exposure through taking the Bitcoin today and buying the machines, right? At the current mining profitability, that just makes sense. So we view it as actually a low time preference strategy, because it's not about how much Bitcoin you have on the balance sheet tomorrow. It's how much you have on the balance sheet in 5 or 10 years when the industry is more matured and you actually start paying dividends to your shareholders in Bitcoin. We don't think our shareholders want to, we don't think that they want us to hold Bitcoin. We think they want us to build high quality institutional grade energy infrastructure, right? We think that's our edge. Our edge is not in doing Michael Saylor, right? As much as I admire that strategy, and I am personally a MicroStrategy shareholder, and I believe in what they're doing. But if we didn't liquidate the Bitcoin every day, we would have to raise more money and dilute the shareholders further. And because we are buying the land and we're more infrastructure heavy relative to an asset light model, that might actually turn out worse for our shareholders. We'd be more indebted. There's a chance the equity would actually perform worse. And we just don't think that's what we're supposed to specialize. And we'll see if that changes over time.
So the premise is, like, you're just buying more hardware now for the potential.
To have more Bitcoin later.
Okay. Nathan, what about you? What's the approach over at Rhodium?
So personally, hold a lot of Bitcoin. Professionally, as a miner, I think the miner's jobs, philosophically, is to secure the network. It's to grow both at home and internationally, and to make sure that it's in friendly jurisdictions. And so if you're thinking about, like, what is going to create the most value for the network, for us, if you're holding Bitcoin, you basically have to say that that Bitcoin liquidated at today's value is going to be worth more than, and as Mike said, you being able to liquidate that, put it into further machines, put it into further infrastructure, and then net, what happens? You're going to get more Bitcoin. If that is the case, then you should liquidate your Bitcoin, because it's going to make you more. You're going to get a greater yield overall. But again, like with the miner prices where they are right now, I don't know if liquidating in order to purchase more machines that, you're looking at $83 right now, you're looking at a 530-day ROI on the machine. Your infrastructure is going to take another 180 days, and that's before the halvening. And so if the miners in air last 3 years, and we have the luxury of our miners lasting 5 years in liquid cooling, but if they last 3 years, then you're saying, look, I just spent all of this money to buy a miner, to get back that money, but then I have to repeat the cycle, and the only thing that I have left is the infrastructure. I got to buy it all over again. And so, as he said, it's dynamic. It really depends on, like, where you going. For Rhodium, it is where can we create the most value with the asset that we're producing. And right now, because of what we do in liquid cooling and innovations on the software and hardware side, the yield that we're getting by plugging in more miners is creating more profitability and adding more benefit to our shareholders.
One last quick comment. If you hold Bitcoin on your balance sheet as a miner, you're effectively doubling down on risk, right? Because you're
Right.
going to take a hit to your income statement and your balance sheet if Bitcoin goes from 44 to 30 or 18 or 15 in a deep bear market type scenario. So we just think for our shareholders, we've made representations of them about how we're going to run the business, and if we double down on risk, how should they trust us to invest in us over the next couple decades? We plan to be around for 50 years or more.
Before we jump over to you, Chris, just last comment here. I think it's interesting, and maybe you and Nathan might have some opinions around it, but by holding the Bitcoin, you're also incentivizing more hash rate to come online because the value of the Bitcoin will go up as you're holding on to it.
Say that again.
By holding Bitcoin, you incentivize more mining. By holding Bitcoin, the price goes up more on Bitcoin.
Okay, so on that regard, Bitcoin's getting big. I would say it's very close to being mainstream if it's not right now. KPMG, which is a Big Four accounting firm, one of the most like risk-off areas ever, just put Bitcoin and Ethereum on their balance sheet. I think that's absolutely crazy and awesome. But Bitcoin, the price of Bitcoin is now being set by capital markets. There's enough people that are buying that know it's at a $1 trillion market cap. The miners liquidating. You have 900 Bitcoin right now that's being liquidated on a daily basis. I don't think that there's a signaling, and so if you're saying the value of the signaling is then going to create price appreciation, but I actually think from a different sense, if you said all the miners liquidate all of their Bitcoin, and then they're going to put more money into that infrastructure, which is then going to create more exahash coming online, which is then making it even more scarce of a resource, and then the network is more secure, that intrinsically, not speculatively, is adding more value. And so, like I said, personally, hold Bitcoin, but there's a business to run, and you just do a mathematical kind of spreadsheet and saying, here's your input costs, here's what we expect if Bitcoin's this price and difficulty goes to here, and based off of that, I can generate more Bitcoin, more yield, or more value for the shareholders.
Chris, want to go to you and give you the opportunity to talk about what's going on at Bitmain. You guys have plans to bring 1,000 megawatts to North America. What is that, like 25,000, 30,000 S19s?
So as far as developing mining farms goes, we're known as a manufacturer, but that doesn't necessarily mean that that's all that we do. We want to be able to support everyone in building up infrastructure if possible. So if anyone has anything that they need help with on particular projects, I mean, you can reach out to us, and we're happy to kind of give you our perspective on how you can expand and how you can grow larger. I think that you shouldn't just focus on the product itself. You have to focus on the ecosystem as a whole, because if the market's healthy, then every participant in the market is going to be healthy.
Okay, that's great. Let's go ahead and keep moving on. We're going to go to renewable energy, and then just in a moment, we're going to do a Q&A. So if you do have a question for anybody up on this panel, there's a mic to your left, to your right, and you're going to be able to come up here, either get ready to ask questions. We're going to keep the renewable energy section short, and then you'll have an opportunity to ask questions to the panelists. Renewable energy, big for Iris. Why is it so important? Why is the industry focused on it?
Because we don't think in the long run any government or municipality is going to allow people to mine with dirty energy. And we think that's where the world is going, right? So it's not even like a moral thing. It's more of just looking rationally at the landscape and realizing that China said, we don't like the smog, right? We don't like the landslides, right? You can deny climate change all you want for political reasons, but at the end of the day, it's just reality in China. They had to stop people from driving on Tuesdays and Thursdays. Otherwise, you weren't going to be able to live in China in the long run. And so we just look at it with clear eyes and say, look, we want to be aligned with the cleanest power source. We think everything's going to be clean in the future, whether you like it or not. And so we want to start the business with that in mind.
Does that include, when you say renewables, though, I mean, because obviously you have base load issues when it comes to wind and solar. Are you guys looking at nuclear as well?
I don't think so. I mean, we're in BC, we're like 100% hydro, right? And hydro is a great source. There's some miners like in Eastern Canada that like literally use rivers, right, for like basically free power, and it's so clean and it's just beautiful. Those types of models just make me smile, right, when I see them. I wish there were more miners like that.
Nathan?
Yeah, I think, and we're doing. I'm very proud of the industry as a whole. We're actually doing a really good job of helping Congress, helping Governor Abbott, helping the overall federal government understand all the benefits that Bitcoin mining really brings to the United States and globally. From a issue perspective, I guess, if they understand, like energy in and of itself is not bad. Using energy is actually a great thing. That's what created the Industrial Revolution. That's why we're all here today. That's why everybody has incredible jobs, or you have greater work-life balance than the 1500s. But I would say the only like Achilles heel that's left with Bitcoin is the CO2 emissions that come from non-renewable sources of power. So I think as far as the defensibility of Bitcoin in and of itself, if we can have all of the miners work collectively, and it can't, you said base load, it can't happen overnight. The technology quite literally isn't there right now across the world to not have resources that are being extracted or CO2 based energy products. But longer term, absolutely. I think every miner really needs to focus on going green. We partnered with an award-winning ESG infrastructure firm that built 11 gigawatts of renewable and transition assets. And so one of the reasons that we built our facility in Temple is because of their plans to put a 300 or 400 megawatt solar farm right beside that. So we can pull, during the time when the sun is shining, we can pull that power. And then we're creating a natural incentive for the producers of that infrastructure because we're using that load. So it finally makes sense again in order to build those renewables, because everybody has the desire to, I don't think anybody has a desire to like have CO2 emissions, but the infrastructure and the natural incentive that comes from Bitcoin mining to these infrastructure partners is what's removing grid congestion. If you're not making money building renewable infrastructure, like all of the ESG funds that have to build that infrastructure, yes, it's zero emissions, but you also have to make profit. You have shareholders that you have to be accountable towards. And so Bitcoin allows for those things to be profitable again. I think Argo's doing a lot in West Texas, pulling from congestion of solar farms. And so like for that example in particular, they're pulling from that. And what's gonna happen is more solar, more wind is coming on. We have 20 gigawatts in Texas alone that's coming on for renewables in the next 2 years. But if Bitcoin does not become kind of eco-friendly first, and I think all the miners know that, that's our greatest risk. So it's incredibly important.
Yeah, it's been interesting to see the BMC report on this as well, the incredible advances that we've made in renewables. Chris, do you have anything to add to the renewable energy conversation?
I would just say that right now we're in a really interesting time because we're in a transitionary period. So if you talk to anybody in the industry, nobody out there is going to say that you can go, well, it's very rare to see 100% renewable energy available. And even if you have it, then you have issues with reliability and storage. If we had the batteries to store the energy from all the renewable energy that we produce, that would be great. So I think that right now we're just in a really crucial time that's a transitionary period. So we should be very careful with how we develop the infrastructure and how we decide to use the energy that we have right now, because it's really hard to go cold turkey and just let go of it right away.
And I think the important thing also is to know that like the transition to clean energy cannot happen overnight. And so like, for example, President Biden, has had various restrictions. They're stopping pipelines and all of those things. And because of that, you've seen the price of gas and also like geopolitical tensions kind of causing this to soar. And then it goes back onto consumers, which then there's a huge fuss. And so it's a train. You got to like move it very slowly. It's hard to stop something and you got to get it going again. And so, but Bitcoin, I'm sure everybody knows kind of a demand response and all of that stuff, but Bitcoin allows for those renewable assets and infrastructure to be placed more quickly in order for us to adapt faster. And I think that now that the legislator and especially the government in Texas is really listening and I was very proud of Texas and all the big miners turning off for the grid over the last winter storm that just happened about a week ago. The narrative's changing, and people are seeing the benefits that are coming from Bitcoin mining.
Yeah, it's been incredible to watch it develop, the impact on the grid here locally. Real quick, just give a quick 10, 15, 30-second answer to the question of either where are we headed, and do you think that we can eventually get to a place where ESG funds will be unlocked, and we can unlock the $15 trillion locked up in ESG funds to come towards Bitcoin and Bitcoin mining?
It's completely inevitable because Bitcoin mining bridges us to a cleaner energy future, period, right? It provides the grid stability, provides the intermittent base load, right? It's the perfect thing to make, the energy market work, right? And I actually think one last comment I just want to say is that I think a Chevron or like a ExxonMobil or ConocoPhillips, like one of these companies is going to buy one of these big publicly traded Bitcoin miners. Like I'm just telling you right now, that's going to happen. So one way as a shareholder you make money is just buy up some of these great Bitcoin miners right now at really low prices and just hold them until these big energy companies get FOMO. They're all going to FOMO in like venture capitalists over the next few years. You'll see it's going to be fun.
We'll go to Q&A soon, so be ready. But Nathan, did you get the question? Where are we going? ESG funds, can we unlock them?
Yeah, I think they're already starting behind the scenes. They're big energy. Bitcoin is big energy. You think about the Rockdale facility, for example, that everybody went to, or a lot of people did, 700 megawatts. Just to put that in perspective, that's more than the entire power for the city of Dallas. So you have the most energy use. Bitcoin mining is incredibly energy intensive, but the big, you talk about BP or Shell or all those big guys, they see, hey, I have, for example, a pipeline that I can use a turbine and spin it, and it costs no money, and then I can generate revenue off of pre-existing infrastructure or something like that. But big energy is already here. The ESG large funds are already here. They just already have all that money, so they're very quiet. But behind the scenes, I think you're going to see a lot of partnerships, and 2023, I think, is going to be the year of partnerships with these mining companies.
Chris, closing comments, where you think the industry is headed, the potential to unlock ESG funds?
Well, I definitely think the industry is heading in a green direction. When you have lawmakers and regulators pushing for green energy and renewable energy, then it's smart to also be involved with that trend. And we're already seeing a lot of development in renewable energy. So I definitely think it's going there. As far as our company, we've, at our WDMS convention in Dubai, we released a special batch of S19XP green miners, where the manufacturing and the first year of operation for the miners was offset by carbon credits. So I think all companies can basically take little steps to get there, and eventually we're going to be seeing the whole industry kind of going towards green Bitcoin mining.
Yeah, I think that's where we're headed. Let's go ahead and move on to the Q&A section. Let's go ahead, Mike, on the right over here. What's your question for the panel?
Chris just touched on it, but I was going to ask about y'all's appetite for these environmental commodities, right? These different types of carbon offset credits, certified emission reduction credits. Chris, sounds like you guys are already buying those. What do you guys think of the future of that market?
I think that it's great to be able to use them. That was a specific case that we did for that batch. As far as what we're going to be doing in the future, I don't have specific plans for that, but I know that overall renewable energy is going to play a big part of that. But I'm not the most experienced personally in purchasing offsets.
It being the Achilles heel of the industry, right? The associated CO2 emissions. Are you guys buying those credits, or any interest in doing that?
Yeah, I think so. Yes, but the RECs are a band-aid. It's allowing Bitcoin miners to be able to say that they're green in the short term, and we're transitioning. We're working really hard. A lot of people hated Elon Musk for talking about kind of how dirty Bitcoin mining was, and I think that it really made us wake up. It shined a spotlight on us. We had a lot of scrutiny, and inevitably, it made the network, it made all of us stronger because of it. We approached it head on. But from the rec side, yes, we are looking at that. We are purchasing carbon offsets. That was part of the deal that we were doing with our ESG infrastructure partner on our second facility. But it's really about stopping emissions at the source. So I understand purchasing the credits, and I get, you're planting trees and all of that stuff. But really, how can you take the power that's either being wasted, like hydro, or work in order to strengthen the grid, to have partner with an ESG infrastructure firm in order to add more renewable sources. And so I like the RECs, but I think, it's really a marketing ploy in a lot of ways. You buy enough money, or you buy enough credits with enough money, and then you're all of a sudden green. And that's not how reality works in the world. And so I'm excited for people like Iris and Bitfarms and all the guys that are really pushing on making sure that we're green moving forward, because that's what I think is going to continue to defend and protect the network.
Mike, any closing comments on that one? Next question. Over here.
So 2022, 2023, as we see, the total hash rate climbing up, a lot of the old miners like S9s are going to start dropping out. I'm curious what your guys' thoughts are on the future of mining acquisition, and if there's going to be this continued arms race for the most efficient miners, and whoever gets those is going to stay ahead, or is that going to slow down and it's going to be more about efficient mining or cheap energy?
I guess I'll go first. So we're really at Moore's Law right now. So you're at the 5 nanometer, and I think people are trying to push the 3, but it takes billions and billions of dollars, and the pathway to tape out is paved with dead bodies. It's not easy to make those chips. That's why everybody uses TSMC and Samsung. What you're seeing now is because the machines, you're now actually using them for the entire mechanical life of the machine. 1, because they're more expensive, and 2, because you don't have these refreshes that are happening more quickly because the technology has really hit that Moore's Law. One of the reasons that there was so much mining in China is because of the manufacturing that was happening in Shenzhen in the first place. And so you had 6 months, right? You couldn't afford to ship it across. The economics didn't make sense, and then you had to unplug it to buy a new one in order to make sure that you're making more money there. And so I think that, and this is, we got very lucky. We were incredibly blessed with, where we started Rhodium in May of 2020. It was probably the worst time ever to raise capital, but that's a different story. But what now we're looking at is how are you getting more with less out of your hardware? And so for us, that's the liquid cooling. That's the advances that the R&D team has done with our infrastructure in order for all of it to speak in real time with that hardware to extract more value, to get more uptime. But you need to treat those assets like they're precious commodities. It's 70% of every miner's budget is going into miners, is going into the mining manufacturing equipment. And so long term, I think people are going to take more care. The machines are going to last longer. Obsolescence is happening more slowly. And we saw the S9, for example, is at 13.5 terahash or something like that. But what did you look at for the last couple of years? You saw 78 to 85 to 88. I know the XP just came out, that was 140, but that was that final frontier on the nanometer node, right? So I think you're going to see that for the next 3-4 years, and it's really how are you going to keep those machines running and being as productive as possible.
I think Nathan did a really good job of explaining that question. And if you look at it, efficiency's keeps getting better and better. But I think that if you have a good machine, you'll be able to keep it for the long haul.
I just would add one thing, and that is that people are so desperate to get more advanced machines and have like some sort of edge that they're literally willing to make up fake machines now and post, press releases for publicly traded companies about a new machine that doesn't actually even exist, right? So that should tell you a little bit about the desperation in the market for an edge.
Last question. Is there someone over here? And then we're going to be pulling it up for that. And then right after this, we're all going to be hanging out, partying. We got Paul Oakenfold come up, so make sure you guys go party in the barn with us later. But last question.
Yes. Hi. My name is Mackenzie. I'm the operations manager at Pump Jack Power. We're option 2 rep here in Texas. And, I know since we're in a deregulated market, there's a lot of, I know some miners face issues when they're trying to actually plug into the grid. What are like the number one hurdles that you face in actually like from permit to power connecting in to start your machines?
I'm going to just make one quick joke, and that is at Iris, it's just me signing the DocuSign. Because we have so few employees that I end up signing like half of the DocuSigns for our new grid connections and all of our land purchase contracts. So our general counsel in Australia is chasing me around, getting me to sign these things. So, I mean, it's basically true. We seem to be pretty good at it, but the big bottleneck is actually me signing the documents.
Sorry.
Wait. Okay, one more thing. We do work in oil and gas, and I needed to say something because I heard you guys talk about a lot of renewables and how green the future is. Like you said, it's not going to happen overnight. We still need oil and gas, and you said the lowest cost, the producers with the lowest costs are going to be the winners in the long run. Well, when you have really cheap power generation like flared gas in West Texas, you have that edge that you're looking for. So just a little note, not really a question. Hi, Petra. That's my name, Petra like petroleum. I'm from Midland.
All right, everybody. Thank you, everybody, so much. Give a big round of applause, please, for Mike, Nathan, and Chris for spending their evening with us. Thank you.